Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading. So you might be interested in that.
Hey everybody, I just wanted to just include a clip of the Pro channel last night. Also, I just wanted to give you guys definitive proof that I am not a robot. You can clearly see the boxes checked. Anyway, very, very wild close yesterday. Lots going on. So I thought it'd be kind of fun to see what I told everybody yesterday.
Let's talk about Bitcoin. And oh my goodness, what an insane day. This is unbelievable. Every day I'm surprised by the next thing that happens in crypto. Oh my goodness, there's so many things to talk about here. Obviously, this is a gigantically ugly candle. If you're at first blush, you're looking at a candle like this. This is bearish. There's no way around it. Not only is it bearish, but when I was freaking out about volume yesterday, we doubled the volume. Yesterday was a 67,000 Bitcoin volume day, and we just had a 130,000 Bitcoin day. So essentially double what we did in volume yesterday. So how on earth do we interpret this, right? That's the challenge, because there's a lot of things at play. We pretty much have an idea that Wyckoff accumulation is in play. Just the fact that just the fact that we are doing pound for pound, move for move, every single move in this market is following this Wyckoff strategy to a T. And so I'm just going to bring up that chart really quick just so we can see it again. So let me zoom out a little bit. Let me pull this over. And then this is the shape of our chart. So in my opinion, phase B was this section where we had a little volatility, but then we established a local bottom, and then we had this sort of up and down move. I think this up and down move is here. And I think that, none of these will look picture perfect. And so I think this spike here was sort of a fake out. I think it was, I think this fake out to the upside here at the beginning of phase B, I think we pretty much saw it at the end. So there's a lot of emotions in play. Whales have kind of created this. I do believe this is our spring, which means I think this is the lowest we will see in our local bottom. In our current thing, our all-time bottom for this cycle is here. But I think this is going to establish our test, because this is our lowest close. So as far as closes are concerned, whales stopped the market at the end of day at its lowest point here. Now, we need to figure out what happens in the rest of phase C, because if we are in phase C, hypothetically, what can we expect? Here is the explanation of phase C. Let's just kind of read it and see what it says. It is in phase C that we'll say Bitcoin price goes through a decisive test of the remaining supply, allowing smart money operators to ascertain whether Bitcoin is ready to be marked up. As noted above, the spring is a price movement below the support level of the trading range. So this is our spring that quickly reverses and moves back into the trading range. It's an example of a bear trap because the drop below support appears to signal resumption of the downtrend. In reality, though, this marks the beginning of a new uptrend, trapping late sellers, bears. In Wyckoff's method, a successful test of supply represented by a spring or a shakeout provides a high probability trading opportunity. So this was our high probability trading opportunity. A low volume spring indicates that the crypto is ready to move up. So this is a good time to initiate at least a partial long position. Now, the appearance of a SOS, help me out. SOS means, sign of strength, okay. It also means help me. Sign of strength, the appearance of a sign of strength shortly after a spring or shakeout validates the analysis. So what did we get after the spring happened? Not only did we have we did have a giant green day. It was the biggest green day that we had seen in a long time. But we also experienced this yesterday. The move up yesterday was kind of a showstopper. It was very, very bullish, very impressive. It represented a lot of confirmation in our, that we were experiencing a breakout. So, but as noted in accumulation schematic number 2, the testing of supply can occur higher up in the trading range without a spring or shakeout. When this occurs, identification of phase C can be challenging. So it's essentially the major thing that we're looking for in phase C is the spring. So let me get my picture out. The spring is the main thing we're looking for in phase C, but there's also this move out of range and a retest of the bottom. So what we've done is we've now come up and we've retested our trading range. So the next thing we do is we have these jagged moves and we'll have tests of higher and then we'll have drops. And obviously this is, the main idea of phase C is the spring. The main idea of the phase D is a sign of strength. But just because none of these will play out exactly the same in every case, we can expect that there will be a lot of emotion and a lot of, there are bears that are completely convinced that the market's going down. We have bulls that are playing with things. And special to our particular market, we have a lot of macro events happening. So there's a whole combination of things that are occurring. And but so far, everything looks like it's intact. Now the question is, how do we interpret this long candle? We have a giant volume. We have a giant bearish candle. And what does that mean? So normally, from the first instinct, you would look at this and you would say it's bearish. But how markets work, and I might be wrong on this, but I'm just going to think, I'll just kind of vocalize some of my thoughts. How markets work is when you've traded in a tight range and you have a lot of bears in there, you find people putting a lot of tight sells in. So people going short or people putting they're doing shorts and they're being on leverage. They would be liquidated up in these ranges. There are a lot of sell levers. There's like layers of sells that come in. The longer we trade in a range, the thicker the buy support down here and the thicker the sell resistance up here. And the longer you're in this range, or the more emotional we are and in this range, the thicker these trades are. People put more money on the banking that we're going down, so they've got lots of sells up here, because if you accidentally wick up, then they're in a great place to be bearish. And then here, the fake out people are like, if we could just get below this, I would totally buy in because I'm bullish and whatever. So you get a lot of buys. When you have a spike through this, what it does is it essentially removes all of the selling layers. So all the tons of orders that have accumulated and built up over the past 10 days, and even more, because this is the highest move since the 15th of September. So we have little cells accumulating all throughout these days, and it gets thicker and thicker over time, and especially as people are bearish, the cells get even more thick. And when you have something that slices through all of that, and it obviously took a lot of volume to do that, it's closed a lot of orders. And so in a certain sense, it can actually clean out the order book and leave more room to run on the upside. Obviously, this is bearish. This is a bearish candle. So it would take a manipulation situation for whales to come back through. But whales could easily push through this easier than they did yesterday because all of the hard work was done yesterday. And it's getting a little difficult because at this time of our market, we are seeing fake outs to the downside and we're seeing fake outs to the upside. So it's almost like we need to approach this market almost as a contrarian. The signs and signals that we're getting from the bears, like closing at the lowest close ever, maybe that's a bullish sign, right? Maybe a candle that looks extremely bearish, is this signaling from whales to trick us out of our position to go the other way? So there's a lot of emotion here at play, and I feel like I hate to be scared out of a position, especially when we haven't broken anything. We still have our trading range intact. We still have our lowest support that we assume is the spring. And I think a close below this would scare me pretty good. Like this would have the potential of shaking me out of my position. But none of that has happened. And we even with this bearish thing, I'm not in a place where I'm completely convinced that suddenly there's a change. When I kind of ignore wicks beyond what the impact is on the market and and kind of the pressures that I'm sensing from these wicks. And if you just look at the bodies of the candle, we are starting to flatten out. So even with this red candle, we have rising support, we have a decrease of downward momentum, and all the setup that we were expecting to make a green candle and for it to stick are still in place. So I kind of feel like I'm still waiting for that. So lots and lots of words to say that I'm just gonna hang on. I think I need more information, and we'll just have to see how the next few days play out. How are things playing out? Dang, I'm glad nobody got faked out from that very sad red bar that happened after this insanely bearish close. I mean, talk about a roller coaster. We're just in a crazy environment. But this is why I trade candle bodies. I don't trade the wicks. The wicks tell us a lot of information though. This was a lot of resistance. And the volume, you ready for your dad joke of the day? This speaks volumes right here. So anyway, the drop had a massive amount of volume, and look what we're doing today. So here is the pro tip of the day. This is how markets top and how markets bottom. Most often, the whale activity happens during the highest volume moments. So you can kind of pick out, this is a pretty high volume moment, right? And when was this? This was during sort of the fake out that happened right here. This is a pretty emotional time, and whales are in complete control. Another high volume moment is when markets are dropping and whales say this is where we're stopping. So that's kind of the emotion here. And then emotion peaked again right here. Things have been pretty calm. Now emotion's insane. Emotion happens when whales are involved, and it's usually at a critical change in the direction or momentum of the market. We would expect high momentum near tops. So high momentum or high volume at tops. We would expect high volume at bottoms. And a lot of these major moves, when you see an unusual increase in activity, usually the direction is running out. And what direction have we been suffering with for the last coming up on a year? It's been the downward direction. And we're seeing volumes that we just haven't seen before. Like these are massive amounts of trading. Now I know we're touching this triangle, but I'm expecting this triangle to be a nothing burger. It is a line that connects quite a few data points and the most recent top that we've had. But this one kind of sliced through it. So this weakens the case for this to be important. But I left it on because I kind of want to see how it ends up playing out. But if you ignore the candle wicks, you know, these long wicks, tons of volatility, and look at just the body. What is the body saying? The body says we have a bottom and we're increasing in momentum. So even though we had this amazing scare last night, you know, we're moving up. So when the markets have traded in a range for quite a while, our market up here is thinner. Yesterday, this chopped through a ton of sells, and so the market is going to move up easier. This sliced through a lot of that resistance. So is our bottom intact? Well, we ran through some of that. So we've kind of opened up ourselves a window of trading, which could create a trading range. But I'm still convinced that our trading range is intact. Our trading range is here. We're intact. We had our Wyckoff spring, and we are in momentum phase. So anyway, it's quite amazing. And Ethereum, same thing, back-to-back long tails. Of course, this has to close 6 hours from now, but the volume is the key. I think that we're seeing such high volume because there's a lot, you know, whales have done a great job scaring people, and retail is high volume, and the ones that are in control are high volume. And the ones in control are ready to change the direction of this move, and it's happening. Like, we are flattening out. Things are looking probably more positive than they have in quite a while. And this is our cue. We didn't see any of this during the rest of all of this. So we have people with a lot of money that are ready to move this price to the next level. Very, very fun. Markets are obviously mixed because there's just, you know, there's a lot of liquidity being moved around in the two majors. But yeah, everything, there's nothing really special to point out. Nothing's really running. There's no trade setup that's kind of an unusual one. So I'll end here. You guys have an awesome day. We are looking at probably a pretty nice week. We've probably got 7 days or more of some blue sky, which would be very welcome for the most recent drop that we've seen. All right, we'll see you guys. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come